The stock market serves as a barometer of economic health and investor sentiment. In 2024, the market has exhibited intriguing trends driven by macroeconomic shifts, technological advancements, geopolitical developments, and evolving investor behaviors. This analysis delves into these trends to provide a comprehensive understanding of the current state of the stock market. Technology stocks continue to dominate the market, with artificial intelligence or AI leading the charge. The rapid adoption of generative AI, machine learning and automation technologies has propelled companies like Nvidia, Microsoft and Alphabet to new heights. Key drivers: AI integration across industries. Companies in healthcare, finance and retail are adopting AI, driving demand for technology solutions. Massive R&D investments, tech giants are funneling billions into AI research, fueling innovation and investor confidence. Government interest. Several governments are backing AI initiatives, further supporting market growth. Market performance. The Nasdaq 100 index, heavily weighted with tech stocks, has outperformed other indices, reflecting investor confidence in tech's growth potential. However, the sector faces valuation concerns, with some experts warning of a potential bubble. Central banks worldwide, particularly the Federal Reserve, have been balancing inflation control with economic growth. Interest rate hikes aimed at curbing inflation have ripple effects across equity markets. Impact on sectors' financials. Higher rates benefit banks due to improved net interest margins, but weigh on the borrowing capacity of consumers and businesses. Real estate. Rising mortgage rates have cooled down the housing market, impacting REITs, or real estate investment trusts. Consumer discretionary sectors like retail and travel have felt the pinch as higher interest rates curb disposable incomes. Investor sentiment. While inflationary pressures have eased compared to 2023, concerns about potential stagflation, low growth combined with persistent inflation, linger, keeping market volatility elevated. The green energy revolution continues to reshape market dynamics. With a global push for decarbonization, renewable energy companies have emerged as a focal point for investors. Notable trends: government policies, the U.S. Inflation Reduction Act and EU's Green Deal have boosted the renewable energy sector. Technological advances, innovations in battery storage and solar panel efficiency are driving cost reductions and adoption. Increased ESG focus. Investors prioritize environmental, social and governance or ESG metrics benefiting sustainable companies. Performance highlights. Solar and wind energy stocks have shown strong returns, though the sector remains sensitive to supply chain disruptions and policy changes. Companies like Tesla, First Solar and Enphase Energy are key players to watch. The interplay of geopolitics and market behavior remains as significant as ever. Ongoing conflicts, trade disputes and sanctions have created uncertainty. Key areas of impact: energy markets. The Russia-Ukraine conflict continues to influence global oil and gas prices. Semiconductors. U.S.-China tensions over semiconductor technology have spurred shifts in supply chains and investments in domestic production. Defense stocks. Increased defense budgets worldwide have bolstered stocks like Lockheed Martin and Raytheon. Market reaction. Periods of heightened geopolitical tension often lead to short-term sell-offs, with investors flocking to safe haven assets like gold. Retail investors continue to influence market trends significantly, a phenomenon accelerated by digital trading platforms and social media. Key drivers. Democratization of investing. Platforms like Robinhood and eToro have lowered entry barriers for individual investors. Social media influence. Communities on Reddit, Twitter and YouTube have amplified retail trading activity. Focus on meme stocks. Stocks like GameStop and AMC remain popular, reflecting speculative enthusiasm. Challenges and risks. Retail investors often face criticism for short-term strategies and lack of diversification. Additionally, market regulators are increasingly scrutinizing this segment. Cryptocurrencies are no longer on the fringe of finance, they're becoming mainstream. Evolving landscape. Institutional adoption. Companies like BlackRock are incorporating crypto assets into portfolios. Regulatory developments. Governments are moving towards clearer crypto regulations, fostering institutional confidence. Tokenized assets. The use of blockchain to tokenize traditional assets like real estate and stocks is gaining traction. Market trends. Bitcoin's resilience in 2024 has rekindled investor interest, and Ethereum's smart contract capabilities continue to dominate decentralized finance, or DeFi. Emerging markets are experiencing a mixed year, with varying outcomes driven by unique regional factors. Positive drivers demographics, younger populations in emerging markets like India and Indonesia are fueling consumption. Digital transformation growth in e-commerce, fintech, and mobile technology is creating new investment opportunities. Commodity exports' high demand for commodities has bolstered economies rich in natural resources. Challenges, debt levels. Rising interest rates increase debt servicing costs for many emerging markets. Political instability, elections and policy shifts in countries like Brazil and Turkey add to market unpredictability. Investment outlook. While emerging market equities offer high growth potential, they come with heightened risks, necessitating a balanced approach. Investors are increasingly exploring alternative assets to diversify portfolios amid stock market volatility. Popular alternatives, private equity. Investments in unlisted companies are gaining traction. Real assets. Assets like infrastructure, farmland, and timber are providing stable returns. Hedge funds. These funds offer strategies to hedge against market downturns. Why it matters. Diversification reduces portfolio risk and provides exposure to non-correlated asset classes. This trend highlights the evolving strategies of both institutional and retail investors. Environmental, social, and governance factors continue to shape investment decisions. Companies with robust ESG practices are attracting capital and outperforming peers. Current trends. Carbon accounting firms are being evaluated on their carbon footprints. Social equity, diversity, and inclusion metrics are influencing investor choices. Governance improvements. Transparent leadership practices are increasingly valued. Performance metrics ESG funds have shown resilience even in volatile markets, reflecting the growing demand for sustainable investing. The stock market in 2024 reflects a dynamic interplay of innovation, economic policy, and investor sentiment. As AI and green energy lead technological transformation, geopolitical and economic challenges add layers of complexity. Emerging trends, such as retail investing, cryptocurrency integration, and ESG focus underscore the evolving nature of modern markets. Investors should remain vigilant, leveraging diversification and staying informed to navigate the intricacies of the current market environment. Understanding these trends is not just about maximizing returns but also about building resilience and adaptability in an ever-changing financial landscape.